Hey, good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, September 29th. This is the second crack at it. Hopefully we get this right. We've had a lot of technical issues recording video the last few days, but hopefully everything moves smoothly. Anyway, one trade, short Aussie US dollar. We had 30% of our normal size, picked up 5.5 pips. On a size adjusted basis, not size adjusted basis, it was 18.4. First, just wanted to go over some economic headlines and some other news that came out this morning. First, we're looking at here was, one second, not consumer confidence. Case-Shiller came out. Bad number. That's the go-to number for real estate. Came in at negative 0.2% growth. Estimate was for a positive 0.1% growth. That's on the heels of, I believe it was yesterday, was existing home sales, which plunged, came in at a negative 1.4% growth, and it was supposed to have a positive growth. So not looking good in housing market. We've been saying it all along. We believe we're on the cusp of another housing sell-off. How deep, how severe is anyone's guess. Probably won't be that bad because the Fed is going to be there to put a bid in under real estate. By yesterday's existing home sales coming out so poorly, it's a direct result of the China bid and the hedge fund bid disappearing. I mean, hedge funds stopped buying 6, 7, 8 months ago. They slowed down. Some of them completely stopped. The largest one, what was it, Blackstone, they've completely stopped. And now China's economy has grinded to a halt. We were saying it for months that it's coming to a halt, and now you're seeing full implications of their economy coming to a halt. And now those Chinese buyers of U.S. real estate, unless they're huge guys, huge men and women with a lot of money, the ones that are on the cusp of being wealthy, and they saw a good chunk of their wealth disappear, whether they're in Chinese real estate, also in stock market, bond market over in China, they're gonna not be so willing to buy U.S. real estate here. What else came out this morning? We had Goldman Sachs. They cut their S&P 500 earning forecast and their price target for the S&P 500. They lowered it to 2,000. They also lowered GDP growth for the third quarter to 2.1% from 2.3%. Not good there. Consumer confidence came out this morning, actually beat estimates, but we get like 2 or 3 different readings of consumer confidence, so it's not really that big of a deal. Just last week, I think at the University of Michigan, consumer confidence was absolutely horrible. So you have to take those with a grain of salt. The Japanese Prime Minister of Finance, I forget his first name, his last name is Abe. They call his, he was one of the proponents of QE with Ben Bernanke years ago during the financial crisis. Ben Bernanke has since moved on, and this guy is still doing his job. Well, he was in New York this morning, and Wall Street has called it, has been calling it Abenomics instead of economics. They've been calling it Abenomics. And he said Abenomics 1.1 is over and it's time for 2.0. So, he's either, look, Japan just last night or 2 nights ago announced a deflationary quarter, not inflation, deflationary quarter. With all the QE that's gone on, there should be massive inflation. And that's what all the central bankers, including him, Ben Bernanke, and other central bankers around the world, Mario Draghi, they all was their forecast of what QE was going to do. We've been saying it all along. It hasn't created the good inflation that is needed. The way they calculate inflation, they take off a lot of the everyday items which you and I use, including food and fuel. So the way they want to calculate inflation, it's just not creating it. As simple as that. We're on the cusp of deflation here in the States as well. So he's either admitting, he's either really stupid because he's saying that he thought Abenomics or QE in Japan was being very successful and their economy's on the right track. I don't believe that he believes that. I believe that he just told the world this morning that QE did not work as they thought, that all it really did was stabilize the economy, and maybe he's going to be announcing a new vision or some new policies to create that inflation, which QE did not create. That could be coming. I wouldn't be surprised in the coming days, weeks, or months. So we'll see. Let's see if there was anything else. Oh, the Atlanta Fed GDP model, GDP Now model, came out yesterday, or no, last Thursday actually. We haven't done a video. They're 1.8%. They see 1.8% growth for the third quarter. Probably the lowest on the street, although that is up, I think, 0.2% from a week or two earlier. Most analysts on the street are 2% or higher. You know, Goldman's 2.1. Goldman was 2.5 just 2 or 3 weeks ago. They came down to 2.3. Now they're 2.1. They keep coming. They'll be down under 2% too, just like the Atlanta Fed. So to us, Atlanta Fed is one of the most guiding forecasts for GDP that you should really follow. I mean, the analysts on Wall Street, look, smart guys. Goldman Sachs, they have some of the best. Other firms, some really great guys. But this is right from the Atlanta Fed, and it's a good model, you know. So I like to watch it. I think it gets updated. It's either every Thursday or every other Thursday. Anyway, so it's 1.8%, not looking very good for the economy, and actually that's on an annualized basis, by the way. So let's get to the trade. Like I said, we had one trade, 5.5 on a size adjusted basis. You can see we were short this from 0.69777 last night. We pieced it out. So this is the average price where we got out of all of our pieces. We pieced it out in thirds, picking up 18.4 pips or 5.5 on a size adjusted basis. You can see what it did. We were out before we shut the computers down for the evening. It did try to hold the half figure of 69.50. Momentarily, kind of, you know, it went below it, but not by much. You're talking 4, 5, 6 pips. Momentarily, it dipped down to about 69.35, 69.36 level, and still coming back to that 69.50, and then popping off of that around 4 or 5 o'clock this morning. So, you know, if you were in it all night, I don't know why you would be. It's just a scalp trade. We only had 30% of our normal size, even though it's a scalp trade, because we're risking, you know, more than say 20 to 30 pips. So you have to reduce your size then, even though it's still a scalp. I don't know why you would hold it overnight. If you're not watching a scalp while you're in it, you have to keep your stop in there for sure. And then on the profit side, you should probably lower your profits. If you're looking for 60 or 50 pips, whatever profit, you should probably lower to 20, 25. So in case it dips and you're in the money 20 pips and then stops and reverses and you wake up and you're flat or you're down, at least you got out with something rather than nothing. It could go to that 20, 30. You could make your money, and then it could run to your initial target. Yes, but if you're not going to be actually having eyeballs on it and watching it, why would you take the chance of being in a profit and then missing out? Anyway, that's the way what we believe in. If you're still holding this now, you'd be down about 13, 14 pips, so not a big deal. But you would have been at one point down about 50 pips. So again, I don't know why you would have held it overnight. If you did, that's really not the idea for scalping. And if you do, you got to narrow your profit target. You can leave your stop the same, of course. So that's it. Good trade. 5.5 pips, like I said, on a size adjusted basis. If we have, we'll do another video. Hopefully this one comes out smoothly. We'll do another video tomorrow, assuming we get some action. If you're still trading now, good luck. And if any signals come out, they'll be coming your way. Have a great rest of your day.